All right, guten Morgen. Comment allez-vous? Hang on, my guitar is echoing again. Should get a band to put over it or something, over the strings. All right, cool. G'day, mate. How are ya? How's your mum? You guys ready to go? Today is the best day ever if you're Joe Biden. I'm sure he's got his depends on. It's going to be a long ceremony. So you guys ready to go? Get going? Do some Forexing? Then let me mark it and let's go. 3, 2, 1, hit it. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yo, 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 yo. So good morning. Wayne's not around. He's probably at the DC for the inauguration. I could have got tickets, though. Right? I could have got tickets. I got the uniform. Check this out. Yeah, see? Rah! I just need the American flag over my shoulder. But the same company that can get me tickets, so literally I could have got seated tickets where we have our own seat. Not up high, but down low looking up. And I'm like, I don't want to go to DC in the winter. But, and this is sad, so it's interesting you bring it up today, the inauguration. But I found out yesterday that my 2021 Masters tickets have been canceled because they've just decided not to have crowds again this year. And I bought them for my dad. He's 79 years old. He's a golf lover. And I'm like, Dad, I bought you tickets to the Masters. So we had it all set up and everything, and I just found out that Augusta National decided to no crowds this year. So my dad's got to live. I got to tell him, you got to live at least one more year because there's no refunds. But they'll give us tickets for 2022. So my dad, live. Right? Get close to the fire. Stay with me, Papa. So anyways, interesting. But that same company that can get you Masters tickets, which is impossible, they can also get you inauguration tickets, which is also impossible. Interesting, right? How do they do it? I don't know. So anyways, cool. Good to have you here. It's a Wednesday. It's the weird day. It's the day that I guess Trump's already gone, right? Pardon Little Wayne. Oh, thank you. So that's really cool. Yeah, Stevie's like, yeah, that's a dream going to Augusta, right? Yeah, it's a big one. And check this out, Steve. So when Bobby Jones built Augusta, he built it in Augusta because it was the halfway point between Florida and New York City, and all the New York reporters would come down, all the sports reporters would come down, do spring training in Florida and cover that for baseball. And then so Bobby Jones said, well, when they're done with that, on the way up, I can make it so we do a golf tournament, because you'd have to get off the train and spend a night in a hotel. So they're like, let's build a golf tournament. All the reporters are going to be there, right? So Bobby Jones buys some farmland not far from the train station to build a golf course. And of course, there's a farmhouse on that land, right? I had reservations staying in the original farmhouse that Augusta National was built on, in the original land and everything. They had one of the top 10 chefs in America who was going to cook the meal and everything, and they had a place out back where at night for you to drink bourbon and smoke cigars. I'm like, nice, right? Canceled. So anyways, it was supposed to be a dream, right? Supposed to be a dream, now it's all gone. Boo-hoo. So interesting. Stupid COVID. All right, so anyways, let's move on. .com. So we got to do the thing called what? Forex, right? Some technicals, fundamentals. Today is an odd day because of everything. So we got to kind of tiptoe through the tulips because they might be landmines, right? So we got to be careful. I don't think there should be too much to worry about. So we'll just go through everything like we normally do. Pay attention, right? Pay attention, be smart, do what we got to do. So ask questions, get involved, take notes, all that kind of stuff. I'd like to thank you for being here. I'd like to thank you for clicking the like button, even though 75% of you haven't done it yet. Thank you for being a subscriber. Thank you for being a client of Trader's Way. If you're not a client of Trader's Way yet, please give them an opportunity to earn your loyalty and respect. Visit tradersway.com, open up a demo account. How about an ECN account, yo? You like that? I prefer variable spread myself, but I like soft costs. You like hard costs. Let's get on with it. But, one interesting thing about an ECN, though, is it's just possibly slightly faster execution. So you can go from awesome execution to super awesome execution. It's your way, a trader's way. Coolio. So anything else? I think that's it. That's a good intro. Good job. Good intro, Wayne. That was good. Cool. Right on. Feel good. Feel good about it. That was good. That was hot. Okay, Theta says, how does intermarket analysis help us in our current fundamentals? Well, setting a bias. Okay. Steve says, great story. Maybe you'll make it across the pond one day. How about also, if you stay long enough, Stevie, go to Augusta National in middle of April, and then at the beginning of May in Kentucky, which is, in America, it's only like an 8-hour drive. It's not that far. For a European, that's crazy, right? But anyways, just 8 hours away, then you have the Kentucky Derby. Oh, and the party's there too, right? You might even be able to squeeze in the Concours d'Elegance in Florida, and you could do the full Monty there. I don't know. How do you spell Concours? Concours d'Elegance. Amelia Island. Amelia is land. Yeah, you can do the full Monty. No, it's March. No, that. Anyways. That's another fun one. So my father-in-law is a car guy, and so last year I bought him tickets to the Concours d'Elegance on Amelia Island. There's another thing to do, right? All right. Let's over there. Boom. I think he turned 70. Wasn't he 70? Anyways, I bought him tickets to the Concours d'Elegance. It's a beautiful day. Oh, I missed that one, Leo. Was there an announcement on Keystone again? Oh, right on, Stevie. Yeah. So did I? Yeah, I missed that one. No, but it's always been canceled, I think. But was that a Biden move? Like, hey guys, boom, cancel? Yeah, I think we knew. Yeah. Okay. Well, we'll see. Lucas said, will yesterday's war room be posted? No. No, it won't be. I know it's a little weird because what if you miss one and then the next one? Consider this more like a dry run, maybe. So, no, I'm not going to post them. It's sort of a benefit for those in the live trading group that upgraded their account, right, so that they could be there. There would have been no reason if I just post everything directly to the main thing. So, no, we'll get through it. And so maybe in 16 weeks, I don't know how many meetings we're going to do. So when it's all done. So think about maybe in the summer, it'll be posted at fxbootcamp.com. Yeah. How many people attended yesterday? And did you like it? Was it good? I felt pretty good, but it's stressful to like I want to give so much and I want to do so much, but there's only so much that can do, right? Yeah. Oh, thank you, Kevin. Kevin, though you're such a nice guy, you probably like everything. It's like that the commercial for the cereal. Do you remember that? Maybe not old enough. They're like, Mikey, give it to Mikey. Mikey will eat anything. The cereal commercial. You remember Mikey? Yeah. Oh, good. Yeah, I'm not really. Maybe it's not quite your typical college professor presentation, but all right. La 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 la. All right, so let's take a look here. So dollar in the middle, yen in the middle, kitty cat sort of. Well, we got a lot of CAD news today, don't we? Is it Wednesday today? I think there's a ton. Oh, don't we have like Canadian interest rate decision? So CAD's a little Oscar Mike. Kiwi down, Aussie down, but kind of neutral. Pound, Oscar Mike, right? Yeah. So you can see it in the numbers here. So I guess we'll probably have to focus on CAD because I don't know if we want to focus on dollar if there's all these news. I don't think there's going to be news, but what if there's a terrorist attack? What if there's a riot? The way I hear it is, DC, Washington DC is lockdown green zone. Right? But anyone that's played Call of Duty knows how to get past that. Okay. Oh, did it? Did my email? Oh, if that happened, I really apologize. I am very sorry if the email said that. I could see that it probably did, didn't it? Sorry. Shoot. Sorry. I apologize. Oh, hate those kinds of mistakes. Let's go back here to the Jan Open. Okay. So here to here. That's the basic premise, correct? Okay. We also know that there's some sort of resistance. Very predictable. Okay. So then you look at a roll reversal, and then it might, so the way I kind of treat it is an upward sloping range, if that makes any sense. I would still plan for it to break up. Okay. So you watch this. Right. So it's just climbing. Well, theta, again, this isn't your average typical normal day. I mean, you could treat it that way, but there's just a slightly different level. I mean, there's slight uniqueness to this day because of the change in power in Washington, D.C. So I don't know if I would just, so when I look at that, and most things are neutral, I guess, let me just go back. I'll kill this. Sometimes I don't say it. I think it or I just assume it, but let's go back to here. When I see like neutral, 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 it just means no trade. Palm Beach, yeah, I'll do Palm Beach. You want to meet up at the Breakers? I'd do that. Of course. We have a lot of FX boot campers that are from South Florida. Just wondering if that's far enough south for everyone to do a meetup. Okay. It says, hey, are those weekly pivots? We use daily, weekly, and monthly. Okay. All right. So anyway, so I see neutral, 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 and I'm like, nah, there's not really a trade. This commodity is down. This commodity is down. This one's up, but just slightly off of neutral, but we know this is news related. So I look here, and there's not really much of a trade. Now, you might do euro pound or something like that. Yeah, okay, that's fair. It's sort of like going shopping while you're hungry, but I mean, you got to do what you got to do, right? So I look at it and go, nah, that's it. Okay? Nothing's changed, but nothing's happening either. Okay? So it might not put you into a trade, but it might keep you in a trade. So like looking at the exotics, for example, one of the things I said with this trade, let me just clear it out. Template, let's just do simple. 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 One of the things I said with this trade is that I expect it to essentially move sideways for a very long time. So today's mediocrity centered around the inauguration, does it change anything for this outlook? No. And to me, that sort of medium to longer term is where I start my thought process. So if today is mediocre as far as relative strength, then I either don't trade or I don't trade much or I don't get carried away or I certainly don't get excited. A lot of people like see things. Something hits something and then you get a candle and they're like, oh my God, that's it! And then like they get super excited to get into a trade. Where when I look at the relative strength first, I'm like, I'm not really that excited. I might take a trade, I may not. It's just not that big of a deal on the long run. You have to understand where I come from. One of the things I did very early on in my career, you have to put yourself in my shoes here. I just got promoted to vice president of my venture capital firm. So we had grown the company to about 300 people. The founder of the company is one that promoted me and gave me a pet project to run. Pretty cool, right? And I'm like, man, I was in the middle of making a decision. And the decision was, should I quit to become a full-time Forex trader? Because I was trading so much while working. And I don't like anything to be mediocre. So I walk up to the president of the company and the founder, and I said, I thank you for the opportunity, but I quit. I want to be a Forex trader. Now just feel that for a second. Okay? And I believe I had just gotten married. Like, was it right after I got married or right before I got married? But it's sort of like, hey, honey, guess what? I quit my job today. Okay? So, I've become a Forex trader, and I'm trading at home. And at first, it's really cool. And then I go through a struggling period, a period of struggle. I'm not getting the returns that I expected. Certainly, after quitting my awesome job, like my awesome job, I quit. So I'm like, Emotionally, this was difficult because A, I had an awesome job, and B, I threw it away, and C, now I ain't making no money, and it sucks. I'm losing money, right? So I'm going through this tough period. And then I asked myself, well, how have I always been successful doing all the different things I had been successful for? And you have to remember, I had been in the national newspapers of Canada and the United States, and I've been in magazines and stuff like that. Like I don't know how to say it, but I was reasonably successful before Forex. All right. So I asked myself, how did I become successful in the past? And I remembered two things. One, I always had a business plan. And two, I always surrounded myself with successful, like-minded people. Always. So I realized those are the two keys to my success, always. And then it occurred to me, holy crap, I don't know another Forex trader. Never met another Forex trader. I don't even know if they exist. Honestly. And the second thing is, I don't have a plan. I don't have a business plan. My plan is to sit down every day, make as much money as I possibly can, but that's not a plan. It's not a strategy. That's not what Fortune 500 companies do. That's not what small startups do. Like, you can't be successful without a plan because plans are all about setting goals and measuring your momentum toward achieving the goals. And I'm like, I don't even have a goal. My goal is to make as much money as I can, but that's a failure. Okay, so this is a long way to answering the question, right? So in this case, after I had done a 3-year pro forma cash flow statement and analysis, it had dawned on me, I have long-term goals. And every daily goal toward the long-term goal is so easily achieved, right? That any individual day over the course of a year is irrelevant. So again, when I look at the charts and it says, okay, mediocrity today, except for the CAD, it tells me a couple of things. Well, maybe it's the inauguration holding everything back, but also maybe the Canadian central bank interest rate decision is also important. And I see it in the numbers, like the matrix. Woo. So, okay, so we'll play around with some kitty CAD. Maybe we'll do CAD yen today. Maybe we'll stay away from the dollar. But we'll keep an eye on the dollar in case it does move, and then we can jump in and, whatever, respond. Okay? But I don't have this pressure where I have to trade. And it's very important to get to that level. I honestly believe that weekend, and again, I spent a whole weekend, 2 or 3 days, I think 3 days, at Ritz-Carlton in Half Moon Bay, California, planning my business called Forex. So it changed everything for me. Psychologically and emotionally, it changed everything. I discovered so many interesting things. So if today is mediocre and I say, oh, well, maybe it's the inauguration, great. If I don't trade today, it doesn't matter. If I lose a little bit of money today, it doesn't matter. As long as on the long run I achieve my small, easily achievable goals, right? So like one of the things we're trying to do is 3 to 5% a month, right? Because we know if you're doing 5 to 6% a month, you're doubling your money every year. So if you're doing 5% a month, you're almost doubling your money. But you're probably doing 300% better than a benchmark like the S&P 500 on a typical year. Okay? Maybe only double the S&P 500 on an amazing year, but on a typical year you might triple it, right? Hey, that ain't bad. So like, are there easily achievable goals, right? And this one tiny little trade is 3%. Or sorry, 1%. Right? 1%. So I'm like, I'm trying to get 3 to 5% a month. One trade! Was that right? Great. So 3 to 5% is achievable. And if my trades are good enough, they're easily achievable. Right? So you're like, okay. So if it doesn't happen today, it's okay. But if something happens, I can jump in and take advantage of it and make some money. I don't think CAD will pop, but we'll play the CAD role. But if we don't get a setup, it's cool. Don't worry about it. It's all right. You see how important it is to get there psychologically? Because then you remove most of the mediocrity from your trading. Okay? 1 out of 3 trades that you do could be a mediocre trade. Maybe it's only 1 out of 4 trades. Maybe it's only 1 out of 5 trades. But you'll see, not in your first year, not in your second year, but by your 4th or 5th year of sort of proper trading, like your money-making years, not you figuring things out. But when you're managing your money and actually growing your accounts year over year over year, you'll see actually the next big step is making one less trade. Not that you're working less, not that you're doing less analysis, not that you're planning less. You're doing all the same amount of work, but it's amazing. Your instincts will get better. Your patience and discipline will get better. It may actually lead to a drop in the number of trades you make, but a significant increase in your profitability. And there are so many paradoxes in Forex. Having gone through this for 20 years, it's amazing how many things are paradoxical. The less you pay yourself, the more money you make, is another classic one that I found. Thank you to Excel. Okay, so anyways, if we get an op, we'll take it. If we don't get an op, we won't take it. Easy peasy lemon squeezy, right? So let's go to, daily pivots on this? I only have it set for a bull. I don't really want to be a bear on kitty cat. I'm pro-growth. Okay? So what was yesterday's day trade? This is a buy zone. So let's just go to yesterday. This is clearly a predefined buy. This is clearly a predefined exit. Okay? This is a clearly defined buy. And this is the clearly defined exit for today. Not that it will get there, but if you get there, you take profit. And then you can see how this would bridge. That was supposed to be blue. Okay? And that gets us to resistance, which poses a problem, doesn't it? Because it may not get through resistance. Certainly not looking at this time frame, you don't know. Okay? So, we'll have to pay attention to that. We're in the 3rd week of January, so this is where we think there should be dollar weakness for 7 to 10 days, and then dollar strength returns. And then at some point the yen is going to start getting strong. But I think that's a bit early. Probably wouldn't happen till more like end of February. So we're about a month away from that. So I think with that logic, this can go it can go higher, especially if you're a believer in global macroeconomics. Now, one of the things that would push this higher is Grandpa Joe's free money. So, so that's that. So, yeah, we'll see what happens today. I don't think it's till 10 a.m. though. So I think we're quite a ways away, I think. Say the sound. Look at that, huh? Nerd! 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 Yeah, that's the kind of person you want in charge of it, right? So your view is CAD may be more bullish. Well, I'm looking at it as from a macro point of view. So I think every commodity producing economy would be, generally speaking, bullish. Okay? So I'm not making a decision on Canada itself per se. I'm not doing bottom-up analysis. I'm doing sort of top-down analysis where I say it looks like the United States, with $5 trillion worth of stimulus, is coming back online, especially with less COVID risk potentially in our future. Okay, great. And I'm seeing positive numbers out of China. So that would indicate potential growth in demand for commodities. It could be wheat, it could be barley, it could be nickel, it could be copper, it could be diamonds, it could be gold, it could be beef, it could be timber, it could be oil, it could be gas, it could be a lot of different things. Iron ore, coal, okay, dairy products, okay. Yesterday we were talking about chickens. We did chicken economics yesterday in the class. So so I'm looking at it from that macro aggregate demand. And if so, that would go up, right? So is Keystone, is the canceling of the deal that important? Well, does the world know about it yet, Alex? Or are we the only people that know it's happened? What percentage of the professional energy complex trading community knows about it? What percentage? 100%. So has the oil market crashed? See, we're talking about how to think. I'm teaching you how to think. Okay? Okay? So I want you to think. When you answer, I ask you a question, you answer it. Okay? Okay? So it has not crashed. And by the way, would that crash? So let's even think about it that way. See, again, I don't know what you know and I don't know what you don't know. So let me just pretend you don't know nothing. It's not a bad place to start, right? It's a great place to start. Okay, let's do it this way. Okay, so let's talk about it. This is the value or the price of oil. This is the quantity of oil, okay? First thing we want to do is demand. Now that they've canceled the pipeline, does it change anything about demand? Or is demand constant? Meaning the world generally needs the same amount of oil yesterday as it does today, and tomorrow is probably going to be about the same, right? But what are we talking about then, shutting down a pipeline? Okay. 1, 2, 3, 4, 5, 6, 7. These are just some sorts of quantities. 1, 2, 3, 4, 5, 6. This is some sort of quantity of currency. Okay? So whatever. More is this way. More is this way. Okay? All right. So what did we do to supply? Is there going to be more supply by reducing a pipeline or less supply? Less. So now we have to shift. It's not a move on the demand, on the supply curve. We have to shift the whole supply curve left. Okay? So we went from equilibrium 1, okay, quantity at 4, and the price at 3.5. Okay? But now we shifted the curve to right? There's less supply. Now there's 2. But the price has risen to 4.8. Price went up. So what, does that hurt Canada or does that benefit Canada? So you have to think about it this way. If Canada produces 5 million barrels a day, day after day after day, every day, in fact, if you told them to stop producing 5 million barrels a day, it'll take them a month just to slow it down. It helps them. Prices went up. The thing about, think about oil like medicine. I'm sorry, Mr. Diabetic. The price of insulin has doubled. So what does the diabetic do? Cut back on insulin? Take half as much? Find an alternative? What's the behavior in a situation like that? You pay the price. You pay it. Costs you twice as much for your insulin. Well, I need the insulin or I die. Well, then you're going to pay. And that's the interesting thing, right? Yeah, go to China. Yeah, but you know, I'll never forget zooming over from Hong Kong to Shenzhen. And we're in the shopping area just on the other side there because that's why people go to Shenzhen from Hong Kong. And there was a dentist. I'll never forget this place. I stuck my head in the door. Like 3/4 of the lights weren't even turned on. It was super dark. And there was like a security guard and a mom with a couple of kids and a couple of dudes. And they're all sitting in this really dark lobby. And it was a little bit dirty. And you look in and you could practically see the bloodstains on the seats. And I'm like, okay, I bet you it's cheaper to get your teeth fixed in Shenzhen. But I'll see you in Hong Kong, right? So anyways. Yeah, so anyways, what I'm getting at is this is an issue of elasticity of prices. So you can Google that. We're not going to go into elasticity of prices. But demand is going to be constant even if price goes up. Think of it this way. It's going to cost you more to put gas into your car. But you have to go to work every day. So what do? You fill your tank and then you bitch and complain. But you fill the tank. Have you ever watched the movie? And I don't recommend it. It'd freak most of people out here. Requiem for a Dream. Oh my God. Oh my God. Don't watch it. It's heavy, dude. Like, don't watch it. It's really, really heavy. Yeah, it's Requiem for a Dream. So you're addicted to heroin, but because supply of heroin is so low in New Jersey, you have to do something to get heroin. Yeah, don't watch it. People are like, it's so, and it's heavy. And you're like, oh, it's just to tell you about how bad doing heroin is. No, it hits everybody in society. Everyone, even grandma, the medical industry, just like, oh, but like it just hits everywhere. Racism, addiction, sexuality, desperateness, self-destruction. Like, oh my God, religion. Like, it just don't watch the movie. Don't watch it, right? Don't watch the movie. But anyways, but the idea is if you're addicted to heroin and prices go up, you got to do something to get, right? You got to do something to get your heroin because the elasticity issue, you just have to do something to get more money because you're going to get the heroin. Right? Oh, you're up in Marietta. That's funny. So, so put it this way: demand will be constant because economies must have energy. Again, think of General Electric running a giant factory, and electricity prices go up 10%, and they're like, "That's outrageous!" All right, everybody, shut the lights off. You know, like you might change your light bulbs and stuff, but you're going to pay the price. Okay. So anyways, demand is demand is demand. So we'll call it demand star to represent that it's constant. It's independent of price. Okay. Supply has changed, price goes up. So if you're selling oil now, like imagine now you're a heroin drug dealer. You're a heroin dealer. And you just happen to have a bunch of heroin that you had for a while, you had to stash somewhere, and then supply got really low in the streets, and all of a sudden, very quickly, prices doubled, and you're like, oh my God, I still got this heroin over here, and prices have doubled. Does it benefit you? Well, you can think of it this way. You owned the heroin, you gave up cash, so you were short the dollar, long heroin. And now you've been holding the heroin. And the dollar, right? And now the price of heroin's gone up. Great. So now you can convert it for more dollars and then you get your dollars back. So it's a trade, right? It's just another trade. So you've benefited now because I don't know what heroin costs. I have no idea. But let's say $1,000 worth of heroin and is now $2,000 worth of heroin. So the heroin dealer doubled his money. Okay, so think of it that way. It's just a trade. They were short cash, long heroin. Then they dump it to someone. They're like, I need the heroin. Well, I'm going to charge you twice as much as last month. I need it. I'll pay it. Good. So then you're long dollar, short heroin. Boom. You make your money. It could be oil. It could be gold. It could be nickel. It could be wheat. Okay. So anyways, demand's constant. Supply went down. Price went up. And whoever is the seller has benefited as long as they bought their supply before prices went up. Yeah, tractors. Tried to trick you, huh? The chicken economics. Okay. So, Canada's selling oil, prices have doubled. Canada hasn't done anything different. You see? If price goes up 10%, Canada hasn't done anything except continue to produce, then they're going to benefit. So if anything, that might benefit Canada because it's not that there's going to be less supply, it's that we thought there was going to be more supply, so we priced that in. Now we've learned, no. There's not going to be more supply. Oh, really? Oh, shoot. Now it's, on the short run, right, undervalued. Oh, is that the girl? From the movie? Even one of the Wayans brothers in it, right? Yeah. Oh, well, Kevin, now you're too specific, right? So again, when you're on macro level, you don't give a damn who produces the oil. So Canada suffers. Who cares about it, right? Someone's going to produce it. So I'm looking at aggregate prices. And whoever in Canada is producing oil, right? Whoever's producing oil in Canada is going to be a benefit. And you're like, well, Jimmy over there is not going to be able to produce it without the egg sale pipeline. I don't care about Jimmy. I care about the world needing, right, oil. Someone will produce it. Canada, whatever they're producing, will be able to sell their oil. They might need a new way. Their profitability might be off, but it's not going to punish all of Canada, right? Canada ain't going down like the Titanic because the Keystone Pipeline was never going to happen anyways. Okay? Never. Never. Okay? How long does that take to effect? Less than 1 second. Yeah. Yeah. Well, it's not just that there's less supply, that in the price discovery process of the market, some people thought there was going to be an XL pipeline. Other people thought there might not be an XL pipeline. And then they negotiate prices based on that. So more supply, lower price. So if suddenly we're like, wait, we're not going to get this Keystone? Now we all agree. We're not going to get the pipeline. Oh, well, we had priced that in. So in that case, you're like, well, then it was undervalued for a bit. And then boom, we're Oscar Mike. So you might say, how much did it matter? Oh, we figured it out somewhere in here. And then that's done. Okay? Because some people may have been thinking this. And the price discovery process between buyers and sellers, they figured it out here. They're like, oh, really? Oop, oop. Okay, done. So now we're already done that. So what do you think about the future? Okay, now it's going to be, we can go back to this chart. Okay. Okay, now, of course, supply and demand is not constant. So if we fix supply for a second here, how can we shift the demand curve? So if we have D1 S star, that means the demand is a variable. How do we shift that? In the other equation, I said demand was constant. The world will need the same amount of oil tomorrow as it did yesterday, generally speaking. Well, don't say how, like, what's the response? You guys are still thinking lower. COVID shifts demand. Okay. If you believe over the next 3 to 6 to 9 to 12 months that we get past COVID, we begin to open economies and demand increases because of an increase in economic activity. People drive to work again, people go to restaurants again, and so on and so forth. People fly on airplanes again, and we get back to where we are. So by the end of 2021, will U.S. GDP, for example, will U.S. GDP be at or close to be equal to 2019 GDP? Or global GDP, will we be moving towards 2019 levels of GDP by the end of 2021? So I don't know what your opinion is. If you think we are moving from 2020 GDP, okay, so 2021, I guess, by the end of it, will that be similar to 2019 before COVID, aka economic recovery? Well, then we're moving out of a trough. So here's what GDP looks like. So it was like this, and then okay, and then we're moving back toward potential GDP. So that's what we're talking about. Remember, I had taught you what this is called. This is a productivity gap. So that's a Y gap. Y equals productivity. So anyways, long story short, if you think we're filling the productivity gap, moving back toward 2019 levels of GDP, demand will increase to D2. What's the consequence? Quantity demanded goes up, and the price goes back, and it has the same effect as cutting supply. Okay? So I don't know what your opinions are. You might say, that's it, we're going in COVID 2.0. Yeah, you might be right. So if that's your opinion, you would plan this differently. Instead, you would shift the demand curve so it's lower, so you'd have less demand than the original equilibrium. So you'd shift this way, less demand, from this quantity and this price, right? And then you would see instead the original equilibrium, or the original price off the equilibrium to the new price is lower because of less demand. Well, then set it up, son. Okay? Because I don't know. And I don't mind you disagreeing with me. The thing is, put the trade on. You're good. You're good at this. You got this. You don't have to agree with me. Right? I'm a former supermodel. You don't have to believe me. You want to believe me because I'm beautiful. You make your decision and you put the trade on. Yeah. Oh, it's easy to believe a beautiful person, huh? Oh, it's easy. You're like, oh, I want you. Do you really love me? And an exotic dancer. Just in my cruise ship days, though. Yeah. Oh, you really love me? Okay. I'll lend you money. Okay, so that's the basis of everything, guys, where you do analysis and you make it, you get an opinion. I think, let's